Spoiler alert, it has little to do with your driving record. Welcome back to the Simple Driver channel. My name is Calvin, and in this video, we're going to be talking about why car insurance is so expensive. I'm going to break that information down for you, so make sure you stay to the end of the video because I am going to give you 2 pro tips that's going to save you a ton of money, even if your car insurance is high right now. The reason most people have no idea how much their car insurance is actually going to cost them is because it's not a set measure. There's several factors that go into play when an insurance company is trying to determine how much they're going to charge you to cover your vehicle. And I'm going to tell you right now, your credit score and how you personally shop is a huge factor. Wait a minute, Calvin, my credit score? Yep, they're going to use your credit score to determine how likely you are to file a claim. They're less concerned about how likely you are to have an accident. They're in business to make money, and they want to take as much as they can out of your pocket and put it in their pocket. Now, we're talking about credit, but just because you understand your FICO score doesn't mean that is the end all be all when it comes to saving money with an insurance company. They're actually going to go into your credit file and look at 100 or 120 different factors, and they're going to select or cherry pick about 30 or 40 of those, which is going to help them determine whether you're an excellent, good, or poor person to actually insure. What does that mean? Well, it means if you have a 500 Beacon score, which is a pretty bad score, but you have an excellent driving record, you'll actually pay hundreds of dollars more than somebody who actually has a DWI, driving while intoxicated, and they have an 800 Beacon score. They'll actually pay hundreds of dollars less than you, even though you have a better driving record. 800 Beacon score is damn good credit. I'll explain more of that in the first pro tip at the end of the video. So what about where I live? Does it matter where I live? Yes. Your insurance can be higher simply because you live in an area where there's lower credit scores. And also regions matter. Let me break it all down for you. If you live in a community where there is a bunch of people with bad credit scores and they are getting insurance quotes from the local branches there, those quotes naturally are going to be higher because they're at more of a risk of filing a claim. You're driving on those same streets and roads as those people in that community, which means that if you're getting an insurance quote from any local branch around in there, then you're probably going to have higher insurance rates. That's why it's good to, shop quotes. I'll get to that here in a second in pro tips. But let's talk about also regions. If you're in a region where there is a lot of traffic, bumper to bumper traffic, I'm in Atlanta, so around 285 or stuff like that where traffic gets congested, insurance rates there are probably going to be a bit higher when you're calling in for quotes versus Blakely, Georgia, where it's a rural place because you're less likely to get in an accident because you're not involved in, bumper to bumper type of traffic. So pay attention to that. What community you live in and what region you live in. That can also be a determining factor. What about Aaron Rodgers and stuff like the discount and double check? What's up with that? Let me just keep it 100 with you. Loyalty to one insurance company, black boxes, speed monitoring devices, anti-theft devices, all of those things have a marginal amount of savings when it comes to pricing for your insurance. At the end of the day, insurance is largely based on whether you're going to file a claim and not whether you're going to have an accident. Okay, so before we get to the 2 pro tips, let me give you 3 factors that are going to determine your insurance quotes. I have them written here in my Evernote. Number 1 is going to be, Number 1 is going to be driver risk. How likely are you to get into an accident? And they're going to look at, your age. They're going to look at, whether you're a male or female. They're going to look at what type of vehicle you're driving. Meaning if you're driving a Nissan Sentra, you're less likely to get in an accident if you're driving a Chevy Corvette, right? Number 2 is going to be car repair and car replacement. How easy is it to get their hands on car parts and replace a vehicle or parts versus not being able to? Again, I'm using that example of a Nissan Sentra. That is a car that pretty much anybody can buy. And so it's going to be easy for them to get their hand on car parts and replacing car parts versus the Chevy Corvette or a Lamborghini. Number 3 is risk of car theft. How likely is your vehicle to get stolen when you're not in it? Like you just went up to your condo, you left it out on the street and somebody actually wants to steal it. It's going to be less likely for them to steal or want to steal a Nissan Sentra versus a more expensive car or a more luxurious car, an Acura or something like that. So that's also going to be a determining factor. Those are your top three: driver risk, car repair and replacement, and risk of theft. Finally, the pro tips. Okay, pro tip number one, check your credit score. Just by knowing your credit score, you can save a ton of money. I'm talking about hundreds of dollars per year. If your credit is higher than what it was when you first got your initial quote, so whether it was a 6-month quote or a 12-month quote, if your credit rating has gone up, you need to call your insurance company immediately and you need to ask for a lower quote. If they won't give it to you, call around and get a different quote and leave that company so that you can save yourself some money. Now, I have here a note that in Hawaii, California, and Massachusetts, they don't allow pricing based around credit. So if you live in one of those three states, Hawaii, California, Massachusetts, if you don't know what your credit score is, I left a link in the description that you can go click. It's pretty easy to find out what your FICO score is. And as a matter of fact, you need to look at all the things that the insurance company is going to be looking at to determine how they're actually going to price you or quote you when it comes to protecting your vehicle. Okay, so pro tip number two is you want to use comparison websites. What you want to do is go to the internet, open up a couple different browsers, enter your detailed information in, and you will see that you're going to get several different quotes. They're going to be very different. Pick the lowest one, but that's just the beginning. What you want to do now is you want to add a driver to your policy. Obviously not the primary, you're the primary, but you want to add a secondary driver to your policy, and not just any driver. You want to add someone with good credit and someone who has a really good driving record, because what that's going to do is lower your risk factor, which is going to save you some money. So those are just some of the reasons why your insurance is so expensive. Make sure you take advantage of the information in this video. Click the link in the description so that you can know what your FICO score is, because that is a large determining factor of why your insurance is so high. If you don't know what your credit score is, you need to know what those companies are looking for. So that's it. Peace.